Welcome back, everyone, to another episode of the EUVC Podcast. Hopefully, by now, the go-to show for European VCs, founders, and LPs who believe in building the future of Europe through entrepreneurship. Today, we zoom in on the intersection of AI and venture building and spotlight a model that I at least often question, primarily for reasons of hubris, but which may now actually be perfectly positioned to thrive in the AI age, at least if it is executed well. Hopefully, doing so is Adrian Locher, co-founder and GP at Merantix, who have just made a major move by planning a flag in London. Together, we unpack the strategy behind that expansion, the evolving venture studio model, and why AI is fundamentally reshaping both how we build companies and how we fund them.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Maybe, Adrian, we will get into the big discussion, but just give a quick comment to my statement that it's oftentimes including a lot of hubris when you choose to build a venture studio model.
So first of all, hi, Andreas, and thanks for having me. I think there has been a lot of company building and a lot of studios out there. Some of them worked. I would argue a lot of them didn't really create the outcomes that people were hoping for. What I can say is when I started Mirantix a couple of years back, actually, with my co-founder Rasmus, we had a model in mind that we ourselves as founders would join. So in other words, we wanted to build a club that we would join ourselves if we were founders, or we are founders, which I still consider myself the most. So I identify more as a founder than I do as an investor, even though obviously the category is I'm an investor.
We'll dive much more into it. I have some views, and I do think that it's important to think about what you do when you try and build a venture studio model and really look yourself squarely in the eye. But let's discuss that later. Let's start out with the leap to go to London. Tell me a bit about your expansion to London and why is it the right time for Mirantix to go?
So when we started Mirantix, I lived in the Bay. I was in San Francisco. I'm originally Swiss, so I grew up in Switzerland. But then after exiting my previous company, I moved over to the US just to explore and meet new people and find new interesting topics that I'm getting excited about. When we then decided to build Mirantix and get it started, obviously one option was to do it in the Bay, Silicon Valley, or what we then chose to do, let's do it in Europe. And so we had a look at all the ecosystems with one big question in mind. If we want to build machine learning first AI native companies, we will need to hire the best talent there is. So it's not about a question, where are we going to find these people, but where will they want to live? And that put back then, that's 10 years back, that put 2 cities on the map. 2 very cosmopolitan cities in Europe. One was London, one was Berlin. Today, there's a lot more, you could argue, but back then it was mainly London and Berlin. And so we looked at different factors and we ended up choosing Berlin as our home. Now, you could argue that historically and even today in deep tech, one of the most relevant ecosystems is London and surrounding universities you got there. And so for us, it was a very logic next step at some point to also increase our footprint outside Germany, in the UK, in London. That said, we never considered ourselves as a Berlin or even German venture studio. Our ambition was always to identify ideas, validate them, and then build companies that first start out in Europe, but have the potential to go global.
Maybe Adrian, just for everyone to be fully aligned or understanding here, Merantix model, could you just describe it for a second and then say exactly what it is you're doing in London now and the pace with which you plan to take more investment activity there?
So Mirantix is a group of 3 pillars, and we're going to talk about mainly the first one today, which is our VC and studio pillar. So we ideate and build novel type of companies through our studio model approach. And we also invest as a VC in those, but also other teams at the pre-seed stage. Second pillar is what we call ecosystem community. That is our campus in Berlin. That is our campus, the London AI Hub in the UK. And that is also our initiative called AI House during the World Economic Forum. The third pillar is called Merantix Momentum. It's a consulting implementation firm that helps governments and large companies to implement AI machine learning projects.
Maybe just talk a little bit about the value of having these 3 together.
So these 3 pillars at first are standalone, independent companies and pillars and teams, also with their respective leadership. But obviously, there are a ton of synergies. When you think about us as an investor looking at new ideas, new teams, I have the whole campus to address when it comes to finding engineers who can help me due diligence a very specific idea. Or I have a very talented team just sitting right next to me, like 10 meters away with Momentum, where no matter what type of question I'm going to ask, I'm most likely going to find at least 2 people with a PhD in exactly that domain. Then on the commercial side as well, obviously, having Momentum, having the campus with those massive networks into the European industry, we have a lot of doors we can open for the ventures in our portfolio, or even at the stage of ideation where it's about, oh, hey, let's identify the first design partners and let them join very early on, which is usually one of the big challenges when you build a new deep tech company. You need to find commercial partners, you need to find clients. But how do they going to sign up with you when you're just a 2-person early stage company? Like, they won't necessarily trust you. And that is a bridge we can build because they already know us, they already have interacted with us in one of the areas. And that then allows us to go much, much quicker on the actual validation and also commercial phase. So there's a ton of synergies that come through the group.
Let me just ask one question, because you have said deep tech many times, and AI is deep tech sometimes. Sometimes it's literally the opposite, which is vibe coding, and you don't know anything about tech, but you just iterate and iterate very rapidly and get a product out there. Could you just talk a little bit about how you distinguish AI from that second type of vibe coding AI business?
No, that's a great question. And the reason why I mentioned deep tech is the type of companies we like to focus on usually have the sort of deep tech complexity when it comes to the business model, but also the technologies behind. So we're not focusing on light wrapper type companies. We are focusing on the application layer, and I think that's an important distinction to make these days. When you say application layer, a lot of people then immediately think of, oh, that's a wrapper company. No, it's not. What we like to build is an application layer that then goes very deep into a respective vertical industry, also integrates themselves along the value chain, and the business model actually is built on the premise that you're not only delivering a technology to your client, but you're actually going to create a lot of value in the whole value chain. And with that, also make it harder for your client to rip you out at some point. That is the type of company we like the most. And to just give you a very concrete example, let's talk about our materials discovery company, Cambrium, as an example. They build novel types of materials based on proteins, and they have built a protein discovery engine that helps you to identify or even sort of code novel types of materials with very specific attributes, with very specific features. So they've not only built this engine that they now market to bio or materials companies, but they actually are having a business model that allows them to participate in the discoveries they do. So in other words, they have a part in the IP they create through that platform as well. So whenever a certain amount of material is sold, they're going to profit as well. So it's not just seed-based model.
Okay, so now let's go into the venture studio model discussion. You wrote a recent essay where you pushed back against the idea that venture studios are passe. And I could ask you what makes the model especially relevant today, but in the spirit of having a lot of emerging managers in here, I would love to just, before going there, ask you, deciding back in the days when you did to make a studio model, how did you inform yourself around this being the right model for you and it not being, as I called it, a situation with a lot of hubris involved? Because that's what I often see when the first thing I think is, oh my God, if you think you can build a studio model, you basically have to assume that I'm smarter than everyone else almost, if I can keep cranking out these great businesses. Comment on that.
Yes, I mean, it's a combination of two things. So one is personal preference, and the other is my assumption about also financial outcomes. So my personal preference, I've always been a builder. I've been a founder for 20 years. I am a builder. I love building things. I'm the 0 to 1 guy. So even after exiting my company, I was not ready, to, let's say, just stand on the sidelines, but I want to be involved. And I also knew from my past experience that there's a lot of stuff that you can help with in the very early days that actually make a difference. While there's also a lot of other stuff, and now we're talking about a lot of other models who have not worked out very well, that just simply doesn't matter. So in my eyes, it doesn't matter to provide accounting, HR, marketing, and this kind of things to your portfolio companies. I need founders who can solve that themselves. Otherwise, they're not the right founders for me. But there's a few things that make a difference. In our case, it's two. So we help with validation, first commercial traction, finding the right customers and move them over the line. And we also help with identifying the right teams and then scale the company quickly. These are two things that, in my personal experience, also were always the hardest tasks when building a company. So that's where I wanted to support. The second rationale with regards to financial outcomes is my thinking. If in early stage investing, it's all about access, identifying the right types of deals you want to make. And it's also about letting them grow into the company you think it should be. Making these decisions is all about experience and data points. When you do a 2-day due diligence and after that you make a decision, most likely it's not going to be as good as if you'd spend 2 or 3 months working with the team and then making that decision. That's exactly what we do in the studio model.
Yeah. So tell me just a little bit about the inception part, because some studios actually incept their businesses, also including the idea, and others let people come with their ideas and then they work with them for 3 months. Talk a bit about where you fall on that.
Well, the short answer is we do both. So we do both. We have people who come to us and they'll be like, hey, I'm working on something I'm very excited about. and we get excited too. And so we decide, let's get it started after validating. And like that, just to make sure we talk about the same things. When I say validating, I mean paying customers. So the secret sauce we have is we usually have paying customers in a company that doesn't even exist for a product that doesn't even exist. So the best outcome that we continue to see when we help to validate these companies very early on, these ideas even, I would say, is I'm able to make clients jump at a PowerPoint type presentation where the vision of the product is presented. And then they join as design clients, as first clients. And then I build the team, and then I build the product. So there's no MVP, there's no line of code when the first paying customers are there. That is what we do. That is what we like to validate before even going into the building phase. And that's also, in my eyes, what makes the biggest difference.
Is that every time, Adrian, that that is your model, so to say, and that's also the businesses that you look for that can be validated, so to say, on the back of a PowerPoint?
I would say mostly. So we focus on B2B type companies, right? Obviously, building a B2C company works very differently. We don't do that. We try to focus on our strengths. We try to focus on where our assets, where our unfair advantage is. And that is in having all these European industrial network of companies. In some cases, we also identify an issue, a problem, an idea space based on things we see in companies through our network, whether that's momentum or through interactions on the campus, that also hosts a lot of corporates and their teams. We then start to validate these ideas. Other times we see breakthroughs in academia, breakthroughs in science, where all of a sudden two trajectories start to intersect, be it machine learning and biology. And then we're like, okay, let's dig deeper there. And then we sometimes reach out to people to validate our own hypotheses. And from these outreaches, all of a sudden we find the right founders who want to build this with us. So there isn't a clear modus operandi that we have. I would say these days it's maybe 60-70% of ideas or idea spaces that emerge within our group, and then we start looking out for people who want to build it with us. The rest is when people approach us from outside.
Oh, I have so many questions. Let me start one here, which is when you don't go out and hunt for talent, I imagine that the recent AI boom has not made it easier to find talent that is ready to jump and who does not cost you a fortune. Or is it the opposite, because the opportunity is that much clearer, and for that reason, more people are ready to go out and build?
Honestly, I don't want to sound cocky on this or arrogant, but finding and convincing the best talent really isn't an issue for us. That probably has a lot to do with what we have built already, right? So we have this massive ecosystem with so many extremely talented and smart and nice people, I have to say, that it makes it incredibly easy for us to convince people to join these companies very early on. It's a different war of talent, I would say, honestly, in Europe than there is in the US. And that has a lot to do, of course, with the level of competition and also the craziness of competition that you currently see in the Bay. That hasn't reached Europe.
So no 120 million signing bonuses for your founders.
No.
In other words. Okay, let me ask you about the time.
It's a smart thing to do, by the way.
Yes.
But that's maybe another.
Let me ask you about the timing question that you commented on in your essay. What do you think that venture studio model in the AI space is particularly relevant today?
AI is a general purpose technology. It is not the cure itself. It's what you build with it. So the way we understand it and what we are mostly focusing on is what we call the novel types of business models that will emerge on this technology. So it's much less about technology. In those cases, we mostly focus on, but it's about what type of business model can be built on top. And for that, it's very obvious that you need a deep integration into your customers' network in the way that you interact with these design partners very, very early on, so you don't build stuff that no one needs. And that is a perfect way you can operate in a venture studio type environment. A second argument I would use is the traditional way of investing early stage was always, okay, here's a team, here's an idea, and now we find some ways how to figure out whether we believe in the idea in the market and whether we believe in the team. We don't need complete teams, and we don't need MVPs to start with. And that's usually where, in the beginning, already a lot of money goes in. If the team has to be complete, if you want to see an MVP, then that requires significant investment. Well, we cut that short. As I mentioned before, we are able to decide to invest and build a company without even having an MVP, and also without having the team perfectly complete yet. Because we also know that the first years in building early stage is pivot land. So when you think you have the perfect team and then you're going to pivot, well, the team is probably not perfect anymore. And then why did you even hire everybody so early on? Wait until you know exactly what you're going to build and who you need to build it.
Yeah. Could we talk a bit about the competition that you have? Because early stage VC is, on the one hand, becoming incredibly competitive, but at the same time, many would also say that it's quite commoditized. Who do you pick? The money at least does not really matter. So what's your take on this? Where do you see the competition against your fellow VCs?
Well, I think the change you've seen in the market is probably twofold. One is pre-seed investors became increasingly keen to start investing earlier and earlier, already almost at angel stage, when what I just mentioned, there's no perfect team yet, there's no product yet, there's no commercial traction yet. So pre-seed early stage investors became increasingly comfortable in doing so. And the other one is the seed guys moved downstream. So people doing seed and Series A a couple of years back today show up at pre-seed, which obviously increases competition.
Yeah. And why do the best founders pick you in this scenario? Because we have some great firms that have moved to pre-seed, at least occasionally.
It's always a combination of factors, right? There are some opportunities where we have the right to win and where we are a great suited investor. And these are the ones we try to pursue and also convince. And there's others where we think like we're not adding the value that then really makes the ultimate difference. And then that's also okay, because I don't have to do 100 investments a year. So I need to pick the 5 to 7 that I think I'm gonna be the best suited to win, but also because I have the biggest lever to make this company successful. So a lot of times it's a combination of this commercial network and this access to early clients to also really validate, and then also when you do validate so early and then also get the commercial traction quite early on, this of course helps you to then raise larger, more successful seed rounds much quicker So in a lot of the seed rounds we've seen in our portfolio, the time from our pre-seed investment to the next seed round was less than 12 months. Why is that so? Because of a lot of traction.
Have you ever felt tempted and actually done an investment in a company that you knew you would not be adding that much value to? So to say that they're not going to use your venture studio model at all. They're just on it, and it's about giving the money together with another very strong.
Yes, we do that. Yes, we do that. Sometimes we arrive later, right? When there's already some traction, when there's already a team, when there's already first clients, there's already a product, a team raising pre-seed, we're still fine with that. So we can do both, right? We decided last summer to make our model open for both ways of investing. And the bar, of course, for us on the pre-seed side is always quite high because in the studio model, we know how much traction we can get those founders to at the point or at the time of investing. And so when we look at pre-seed that are pre-revenue and are very far away from commercial validation, we sometimes get jittery. And we're like, maybe it's too early for us, because when we do it through the studio type of approach, we can do so much more and we can de-risk things so much more for the founders and us. But it ultimately always comes down to founders teams. So when I invest in founders, right?
You have been in the AI space from before it was hot, and investing actually.
Before it was cool.
Yes, exactly. I'd love to ask you, how have you seen this past period play out? And would you say that it's now easier to be an AI investor? Or would you say that it's harder? Are you more excited now than you were 5 years ago? Or would you just say that now the world around you is more excited, but honestly, you've been equally excited?
I think we've always been very excited about, initially we mostly called it machine learning. Today, everybody calls it AI. We're always very excited about what we think is a new category creation technology, right? That enables you to build companies that before just simply wouldn't exist and couldn't exist, right? Without this technology. That is the stuff that gets us most excited. What I think has changed over the past couple of years, of course, is the understanding of the broader public of AI has developed much, much further. I would say still, you could argue that most people, when they think of AI, they think of ChatGPT. And obviously that's the 1% of what you can do using machine learning and AI. But in general, I think the openness has grown. And also the openness for companies and clients to look into these types of technologies. And with that, also, it's become increasingly easier to convince clients to move early. I think that has changed. That has changed a lot. In some ways, also, you see positive impact on regulatory change. So, we do a lot of healthcare, we do a lot of life science and bio, and that's heavily regulated industries, obviously. And it matters whether regulators are quick or whether regulators are slow. And regulators are always slow when they think it's risky. And when they think there is a lot of potential, they can become quicker. And right now, I think we see a certain tendency for them to become quicker because they also see the potential that technology has.
Let's talk a bit about regulation. We recently put out an episode in connection to the launch of the AI Act. I'd love to ask you a bit about where you see the big regulatory hurdles and the big regulatory sweet spots or good trajectories we're on.
Well, I think there's a few first principles here, right? So regulation is something that is required because it sets the frameworks we operate in as a society, and history has shown us that that's the best way to organize society. Now, the debate then is of obviously how much regulation and how much or how complex this should be. The good thing about Europe is, well, we will have regulation. We know what is coming. The bad thing is we don't exactly know what is coming because there's so much still in debate. And honestly, also a lot of what looked quite certain a year ago is now again a bit less certain because there's new questions. And fundamentally, I think the architecture of the AI Act is very tricky. The AI Act is based on the assumption that you regulate a technology. And I think the better idea is you regulate the application because technology is moving quick. And when you need to regulate something, you also need to describe it. And when you describe it, and then it goes into law, and it's a long process to change law. Most likely, you're going to look at new technologies that don't fall under what you've written in the law 3 years ago. And so you're also looking at a lot of gray areas all of a sudden that can even be opportunities, right? So I would even argue that in some areas in Europe, probably in a few years from now, we might have opportunities because there's no clear regulation yet. So people can actually also try a lot. It's really an interesting point in time right now. The majority of regulation is not yet in place.
It's such a big topic, and you can easily get caught up.
I know. The thing is, people sometimes argue that, oh, well, yeah, the US is doing so much better job on regulation. But then when you look at it in detail, you also realize, well, there's no clear framework in place yet. There is a lot of, small pieces around, and also even these change relatively quick right now. That is not necessarily a better starting point when you don't know how things will be regulated, right? So, and yet, as I mentioned before, I think that argument was very strong 12 months ago, is less strong now because we also don't know which of the AI Act parts are going to come into force in which exact shape.
Like you made it pretty clear, you think that the most important thing is definitely to have an application focus when you legislate rather than or regulate rather than a technology focus.
That's what I believe, right? So, and I'm always happy to be proven wrong, but conceptually right now, after looking at all this, I think that's what makes most sense. But again,
Adrian, are you yourself involved in some of the work here? Are your collaborators in the ecosystem involved?
We are. We've been founders of the German AI Association, which today I think is the largest AI association in Europe, not only operating in Germany anymore, but also on the EU level. So with that organization, where we still are part of the leadership, we do collaborate and we do try to have an influence on things going in the right direction. Yes.
Do you have any views on the priorities, the advocacy priorities that you think are most critical for Europe to get right, to maintain our competitiveness?
Well, I would argue that regulation is one part, but probably bigger levers for being competitive will be making sure we tear down the silos in academia, because all the great innovation is happening on the fringe of where different types or different dimensions of academia come together, talking of machine learning, biology, chemistry, and all these fields. And in Europe, you still have a tendency of these academic domains being very siloed, right? Another area where I think we need to change how things are going is in which how governments are investing in novel technologies, in new ideas. Because today, the DARPA style investing, what I call, is definitely an absolute exception. And the usual type of investing is, well, I'm going to invest in things that don't go wrong, right? Because otherwise I can lose my job. And I think that's a huge problem when you think about investing in breakthrough innovation. Because in breakthrough innovation, well, most things go wrong, but the few things that work will pull everything out. So that's the typical venture type thinking, does not exist there. So yes, we need to be more risk-taking also on these levels. And when it comes to regulation, I think, again, it's important for us as a society to think about what is it we want and what is it we don't. And that then needs to go into regulation. But we also need to make sure we're not trying to think of the next 10 years and how things could look like, and then how we want to regulate them when things might come out very different that we're thinking about it right now.
Talking about regulation, one thing that comes before that, Europe's comparative advantage. I'd love to hear, where do you see that we have our hallmark strengths?
The way we think about that is actually quite simple. So if you look out at different industries and then look, what are the world leaders? Where are they from? You have a lot of industries where Europe has tremendously successful and strong companies. Think about the whole industry, energy, manufacturing, robotics, all these spaces. A lot of European firms dominate the global economy, and they're global companies now, but they emerged in Europe and they're still headquartered here. Then look at healthcare, a lot of medtech, a lot of biotech, pharma life science. A lot of the leading pharma companies are European ones. Look at finance, banking, insurance. A lot of leading companies, again, coming out of Europe. So I think it's wrong to think there's no European strengths. I think what we need to focus on is, what are these types of industries that where we have great ecosystems already, where we also have great research, and these are the domains we can build, again, amazing companies in. Now, when it comes to building the world's largest language model company, well, I would argue there's probably not a lot of reasons why this should be a European company. So I think we need to think about those spaces where we are better suited to build global companies than others.
And to you, that is, as an example, healthcare, pharma, traditional industry, so to say, anything manufacturing, finance, fintech?
Yeah.
Any other verticals, places where you look specifically?
One that we continue to debate is education. I think it's an incredibly important industry because it creates the future of our world, right? And yet it's also a very tricky industry, also with a lot of regulation and a lot of government monopolies, which not always help when it comes to transforming and making them future-proof and resilient. Yet, I think one of the areas where technology also will have an incredible impact. So that is one, also because I'm a dad of two, that I deeply care about this. And when I say hotly debated, is because we tend to look at quite a few cases, but it's also very hard to find venture scale cases in education.
I've had some discussions or talks with people about this specifically as well. I'm also very passionate about the edtech space, or at least the education space, being a father of two as well. And what baffles me now, I guess your kids are also in Germany. And in Germany, you have this rule basically that it's very hard to get education in a non-traditional way.
Yes, which I think is a problem because
Yeah.
you're taking out competition, right?
That's exactly what you're doing. If you would just venture with me down a weird rabbit hole here, the fund that I would wish that we had in this world is a fund that would literally go out and find the places where AI can prove to truly displace the existing system of hierarchy. So as an example, education, not a Duolingo type thing, you might have it as your beachhead that you got to have it be how you first ensure adoption from a few people that can actually work with it. But the stated goal of the company is to completely disrupt education, assuming that there's no reason why that in an era of AI, you would not completely change the system. I would wish we had a fund that would go out and purely look for companies that did this, where you say it's fabric of society disrupting innovations or creations.
I would love that. And we would probably need to create sandbox environments in which regulation is changed or scrapped, and you test out new types of approaches. Because, as you said, the one innovation killer here is that if you just don't allow competition, or you put the bar for competition to come up so high that it's almost impossible, and no one really wants to go those lengths to come up, then innovation is dead.
Yeah, it's absolutely terrible. Okay, I want to ask you a bit about the future for AI startups and studios in 2030. What's your vision for the future of venture studios in AI? Will they become the dominant model for early stage creation, or is it just something that Mirantix does and the majority will stay pre-seed and seed investor?
You know, when I looked at this question, I was like, oh, great. How can I even tell how the world looks like in 12 months now? Yeah. So how can I talk about the next 5 years? This is not going to be the only model how successful companies are created. I hope not. And there is no reason for that. And I wouldn't see any. But it's certainly going to be a dominant model in certain types of companies and certain verticals, maybe also. What I mentioned before is it's fair to say we mostly build complex companies that are not super easy to build in the first place. And they require a lot of things to be true until this company can start. And that is what our model is great for, as we usually can wait for quite some time until we have all these constellations in place to then get the company started. Whether that's in fintech or in legal tech, healthcare, bio, these are all highly regulated industries, and building companies in them is complex. Now, I would argue there's a lot of other companies that exist out there and that are very successful, that are maybe a bit less complex to build, where the advantage of using a studio type approach might be smaller. But then again, I think there's also going to be probably new types of company building. Some of my friends are currently thinking about agentic built companies, right? Where one person, or not even one person, but a group of agents is building a company. That's certainly possible. There is ideas about blockchain-based company building, or I'm certain about the fact that we will see also very different types of companies in the future. We'll see a lot more non-traditional VC type startups emerging, where they won't have the traditional VC scale if they're successful, but they also don't need to. That's totally fine because it's great businesses and they should be built, but they don't fit the traditional return profile that a venture investor needs. So I think this technology is going to fuel a lot more innovative ways in building companies, as the internet did, right?
Yeah.
And I'm excited about that. And of course, I hope that there's a good chunk of VC investable types for us to be built. But I'm also very excited about a lot of other ways of building companies, because remember, I'm a builder.
Yeah, I think that you're absolutely right on that front. Yes, we're going to see a lot of big companies be built that will topple the existing incumbents. But oh man, are we going to see some very small, efficient companies also come in and just absolutely decimate the existing suite of SMEs that we have, because there's so much you can do that. Yes, that's going to be very interesting to see. I want to ask you one final question. What's one bet you're making today that others might call too early or too crazy?
So we're right now looking into quite a few, you could call them Neurotech opportunities, where I'm personally very excited, because I understand, or the way I understand things is, using machine learning probably in the first time of human history gives us a shot at understanding the brain as probably the most complex human system that there is. And in breaking that barrier, in overcoming that frontier, I think there's an unlimited space of options that come once we get there. And yet, one of the challenges in this space, obviously, is that you always need to ask yourself the question, well, is it going to happen in the next 3 months, 3 years, or 10 years? And obviously, the 10 years isn't really what you can access with an early stage type of mindset when you have VC in mind. So then it's too early, right? And I'm personally very excited about this space, and I think there's a lot coming. Some of it might be too early, which is then more kind of a basic research type case, but others might be exactly at the right time when early adoption just starts hitting the ground.
The question on this, the question of being too early and so on. The magic of part of the magic of Elon. There's a lot of magic around him. There's also a lot of interesting things that people would not refer to as magic, but there's a lot of magic around him. One of them is that he can make bets that are otherwise would be deemed not ready yet, but he's able to then fundraise for it and be able to get it off the ground. And yes, he then is also an incredible executor. But do you think that we are in any way, or are we in Europe in a place where you can fund these types of very grand bets? Now, you gave a concrete example of the human computer interface, or the everything connected to the brain, which is somewhere where many would say, well, it's probably too early. But the fact of the matter is that Elon did it with his company 5 years ago, if not more. And that is not a problem from a venture perspective, because he's been able to stay alive and increase valuation because of the results that they're getting and the hype that they can build around it. Do you think that we are in a place where you can make as bold bets as that without Elon? Or does it need to be in San Francisco and with someone like Elon behind the helm?
Honestly, I hope so. The answer to your question is yes. So my strong take on this is, if I answer the question 10 years back, and I answer the question now, I think a lot has happened, and there's a lot of reasons why even these type of things today become possible in Europe, for ecosystem reasons, for investor and mindset reasons as well. But at the same time, of course, also for research and all the academic pieces that need to be in place. I think we have a lot of the components that you need to build these bold bets. We simply need to put them together in the right way.
And we do have Proxima Fusion and similar types of companies that are being founded here and funded here that seem to be working and actually being able to raise. So that is incredible good news and a strong signal for these big, bold bets to be possible. Adrian, thank you so much for joining me today.
Andreas, thanks for having me.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.